Good afternoon, everybody, or good morning to those that are joining across the Atlantic. Today's session, I'm accompanied here by David from Caxton, Guilherme from Oxy Capital. My name is James, and I am the founder and CEO of moviinn. moviinn is a relocation and immigration agency assisting those looking at either relocating or investing into Portugal. For today's topic, we'll be discussing, in particular, the Portuguese Golden Visa program. And for that, we have two special guests, as I mentioned, Guilherme, who'll be touching more on the Golden Visa funds. And then we will also be speaking to David in regards to currency exchange and how to best optimize the transfer of funds when investing into the Golden Visa program. So just to start off with, just a quick introduction in terms of moviinn. So we do help people at every stage of the relocation and investment route. So whether people are still in that research phase, looking to understand what is the best solution or program for them, once that decision is made, helping them in terms of legal and in terms of investment in order to make it a smooth process all the way through over the 5-year program. Furthermore, in those that relocate to Portugal, we also do help in terms of settling in and becoming accustomed to Portuguese society, wherever that might be on continental Portugal or in the islands of Açores or Madeira. Okay, so just a quick one in terms of the program itself. Some of the benefits from the Portuguese program, some may have recently heard that the Spanish program, Golden Visa program, has been axed as of April. And very recently, at the end of April, we saw a judgment come in from the European Court in regards to claiming the Maltese program as being illegal. So they are now in a phase of adapting that program. So just in terms of the Portuguese program, so some of the big benefits initially at the program, the application phase, is that with one investment, people can not only bring in their children through family reunification, but also through family reunification, you can add parents, those that are of both spouses. So this is a benefit from the program as well. So it's the entire immediate family that can then apply through one investment. We also have the opportunity here with the Portuguese Golden Visa program to go all the way up to the application and the investment and do this remotely. Then the applicants will be required, obviously, to come into Portugal once their appointments have been scheduled with the immigration office to have a final interview, and it's more of a meeting with the immigration office where biometric data is also collected in order to then be able to issue one's residency permit. Furthermore, in regards to the minimum stay for the Portuguese Golden Visa program, on average, we're looking at a 1 week per year. In most cases, people like to spend more time than that, but the minimum is the 1 week stay per year. And as most of you already know, the program goes on for a 5-year duration. At the end of the 5 years, you do have the option to request permanent citizenship and or citizenship. So, sorry, permanent residency or citizenship itself. So without further ado, I will hand over the stage to my colleague here, Guilherme, who will have a chat with you about investing in funds in Portugal, and then we'll go into some examples of what Oxy Capital is doing at this point in time as well. Over to you, Guilherme.
Great. Thank you so much, James. And once again, thank you so much for the invite to be here. It's always a pleasure to have these initiatives with moviinn, especially this one. Yeah, so I have here a small presentation, just 2 slides, just a bit to help a bit on the presentation on my side. So I believe right now you can see my screen. So generally overview about Oxy Capital. So we are actually the largest private equity firm in Portugal. We have started in 2012, and so we manage more than 1.5 billion euros under subscribed capital. Most of our investors are actually institutional investors, so banks, foundations, pension funds, family offices, both from Portugal, United States, and also European Union. More recently, in 2023, with the changes on the Golden Visa, so from real estate into funds that cannot invest in real estate, and since our what we have been doing since 2012, mainly with institutional investors, has been investing and fund managing funds that do not invest in real estate. We decided in 2023 to also have funds that would respect the main requirements on the Golden Visa side, so what I like to say that we are a traditional investment firm that started also to have these options for Golden Visa investors. So we have a long experience. So since 2012, we have done more than 100 investments on the private side, both in Portugal and in Spain, different sectors, industrial, software, services, even in the past some hospitality and agro businesses. Fortunately, we have been able to have quite interesting track record, both on the private equity side and in the public market side. And in the next slide, I will deep dive a bit the difference between those two. As of today, we are almost, I would say, more or less 30 people on the investment team, with quite a significant track record, and many of them actually with the previous experiences on interesting consultancy firms in the past. Moving on to the next slide. So we, over these last 12 years, we have had experiences in different strategies, but actually our main two strategies are private equity and public markets. On the private equity side, what we do is actually invest in private companies in Portugal and in Spain, mature businesses. That's why it's private equity, not venture capital. So it's private equity, where we try to invest in those businesses, help those businesses grow, and then 4, 5, 6 years later, exit the business, either through a sale or either through a if it's a debt instrument, receiving the debt instrument, and so on. This on the private side, on the private equity side. On the public market side, we invest in the stock market. So specifically what we do is actually investing in companies on the stock market mainly in Europe and Canada, in businesses that we have a strong knowledge in. What I mean by this is businesses that we have experience on the sector they are in, usually related to our private equity experience. Okay, so we use the knowledge of our private companies' investments to understand the operational side of the businesses and to study interesting companies on the stock market, mainly in Europe and Canada. So on the fundraising side, currently we have two options. One in public equities and the other in private equity. So the first one in the public equity side, so it's called Portugal Liquid Opportunities Fund. It invests more than 60% in public equities in Portugal, so more than 60% on the stock market in Portugal, and 40% is invested in our international strategy, mainly Canada and Europe, also on the stock market of these areas. So this way, this fund has been quite interesting, because while ticking the box on the Golden Visa side, on the more than 60% investment in the Portuguese stock market, it allows for people to be diversified with the international exposure, not only being focused in Portugal. At the same time, so it is an open-ended fund. It allows investors to exit whenever the process is done, the Golden Visa process in that sense. So two great advantages: open-ended funds, investors can exit whenever they wish to do so, and international exposure. So while respecting the more than 60% in Portugal, it allows to diversify in terms of geography and in terms of economy. This fund currently is performing at more or less 9% net returns per year. Second fund, it's our private equity fund on the GV side. So it's called Mercurio 2. It's a fund focused on investing in major businesses in Portugal, both with equity and debt structures. It's called Mercurio 2 because there was a Mercurio 1. Mercurio 1 was actually invested also by a state-owned bank, and by the team itself, and by investors on the Golden Visa side. Currently, we actually have 4 investments, 3 in industrial businesses and 1 in a restaurant chain in Portugal. So this fund invests in companies in Portugal, major businesses. Once again, the goal here is to invest in major businesses and help the management team to grow the business in order for us to exit in a 4, 5, 6 years time. So we have these 2 options, 2 different targets, both target returns and both target assets into the investment side, that I would say are quite interesting. At the same time, since both the minimum investment is 100K, it also allows you to split between the funds to meet the 500K criteria on the Golden Visa side. So yes, so this was what I had in mind for the presentation on my side. I'm happy to answer any questions that you may have. And thank you so much for this opportunity once again.
Sorry, James, I think you're muted.
Thank you so much, David. Thank you very much. So, Guilherme, we'll come to the audience's questions towards the end, but just wanted to have the opportunity to ask you a few questions myself. So you did mention that, there's this 60-40 split. Can you just share with the audience, what's that about, the 60-40 split? Is it a requirement? Is it something just simply a strategy of yours?
So the requirement on the Golden Visa side is to invest 60% in Portuguese in Portuguese companies. What we have developed a strategy that I don't believe there are any or many, at least, funds like these, is allowing to diversify into the Portuguese economy. So not only being exposed to the Portuguese economy, so while respecting the 60%, so we usually invest a bit more to maintain that threshold in line, diversifying into different economies on the 40% side of the fund. What we actually do is investing on stock markets in Europe, and Canada. So when I say Europe, for example, UK, Germany, Spain, and also, for example, Canada, especially investing through our non-Golden Visa fund that has also non-Golden Visa investors that invest not for the Golden Visa perk, but for the financial returns. So that's also interesting for the Golden Visa investor because it's comfortable on investing side by side, not only with the team, because the team invests heavily also, but also with professional investors that are here investing for financial returns and not for the perk of the Golden Visa in that sense.
Okay, so there's a mix within that. A question in terms of the funds. So you mentioned the private equity fund and also the public markets fund. In terms of the duration of the funds at the moment of these two, can you? So I mean, with Golden Visa applicants, they definitely obviously need to hold the investment over a 5-year period in order to be able to be eligible for then applying for citizenship at the end of the program. But in terms of the funds themselves, what is the lifespan and how does that work with clients?
So on the public equity side, the fund is what we call perpetual, so it doesn't have an end. This means that it gives flexibility to the investor. That's why also the name Portugal Liquid Opportunities, in a sense that gives opportunity to the investor to exit whenever the program is finished, if it takes 5 years, 6 years, 7 years, whenever. Because it's investing on the stock market, so it's more liquid in that sense.
Okay.
The private equity funds, the Mercurio 2 currently is until December 2033, so it's roughly 8 years. What happens is, so during those 8 years, of course, it is expected to have some dividends and some interests that will be received from the companies, and that can be distributed to investors. But the initial capital can only be distributed in the end as part of the Golden Visa program.
Okay. You mentioned also in terms of the split. So in the case of the Golden Visa applicants, we know that there's a minimum investment to be made of 500,000 euros. So in this case here, they would have the option to split that over multiple funds. Is that right?
Exactly. So they can split with different funds. The minimum investment in each one is 100K. So it also allows them either to split between us or even to split with other management entities besides Oxy.
Okay, great. Just one last question. In terms of investor profiles, so between those that are looking more towards private equity funds and those that are more interested in public market funds, have you seen sort of a pattern there in terms of profiles, investor profiles?
Usually, when people are a bit more conservative, they prefer to invest in the public equity side, mainly because of the liquidity and because it's public equities, you are investing in large companies, or at least larger enough to be publicly traded. So it gives an extra level of comfort. At the same time, it's a Google away for you to know more about the companies that we are investing in, because since they are public, the meaning public means everyone can just Google it and get the information. So usually a bit more conservative investors try to go into the first one, and even because of the liquidity. The second fund, the private equity fund, also we have some conservative investors that do, for example, split more in the public equities and a bit on the private equity, or investors that are more used to investing in private equity or understand quite well the private equity concept, understand that we are quite different in the market, and perceive that and invest on that fund.
Into the private equity. Okay. And then obviously we haven't touched on venture capital, which is out of the scope of today's conversation, but
Exactly.
which is the other spectrum, which I guess is for those that are a little bit more risk.
Risk takers.
Exactly. Thanks. Thank you, Guilherme, for now. We'll move on to David and hear a little bit more about how we can optimize currency exchanges and transfers for clients that are watching us today.
Certainly, absolutely. Thank you very much, James, and thank you, Oxy, for that really great presentation. Very interesting. My name is David Stritch. I am the Senior Foreign Exchange Analyst here at Caxton, and I'm very happy today to be partnered with moviinn, which is really just to provide for you an idea of what services we do. Here at Caxton, we've been established since 2002, and we've been really laser focused on foreign exchange. So whilst Oxy, with that very good presentation, that'll handle the investment side of the operation, and moviinn will handle a much more touch side of the operation, making sure that you're settled, making sure you understand the process. Caxton really provides that middle bit, which is both protecting your money when you're investing initially into Portugal, moving in, that is simply the foreign exchange aspect, which I shouldn't need to tell some of the audience, with Trump being the president of the United States, there's no shortage for things for us to be keeping an eye on. But we also, besides just the ideas on exactly what's going to be happening with foreign exchange, we'd also be keeping tightly in contact with you. As I say, established since 2002. You may have noticed my accent is slightly different from my co-hosts. We are UK based. We've been doing this for years. And whilst we have been specializing, providing this service for those interested in the Portuguese Golden Visa and various other Golden Visa schemes for a number of years, just shy of a decade at the moment, we have seen a significant uptick in interest since Trump has become president, and that isn't just particularly because of the policies. We have seen a significant amount of volatility in US assets, and that has really coincided with a big uptick in European assets. Anyone who's been keeping an eye on financial news lately, which why would you if it wasn't your job, such as me? You've noticed that European assets have been outperforming US assets significantly this year. We've seen the Euro Stocks Index, the broader Euro Stocks Index, that is the top 500 companies in Europe, that index appreciate by 10%, particularly but if we're talking about Portugal particularly, then we have a special opportunity, and that's what makes this visa so attractive. And what if you are considering it makes moviinn so particularly useful, which is we've seen a 15% increase in the value of the Lisbon Stock Exchange in particular since the start of the year. We know that real estate has been taken off the cards in terms of the Golden Visa, but that stock market remains really very strong. And what's going to make it stronger, and what we're hearing at Caxton a lot when I speak to clients directly from the United States, from Canada, from various other parts of the world, is that not only is Portugal an attractive place to live, not just because I live in Manchester, I'd swap it out for Portuguese weather any day of the week, but also it's a particularly attractive place for capital to be accumulating, even more so now that the United States is being seen as a suspicious, if you like, actor on the world stage in terms of safety of capital. Now, what we have seen is the euro appreciate by about 4% against the pound, even since the start of the year. We've seen it appreciate 6% against the dollar, up to 8% at the very troughs of this year. So what Caxton specialise in, what we've specialised in now for over 2 decades, is protecting you during that initial transfer of wealth, making sure that you get the very best deal available. We'll not only beat our competitors on price, but we'll also beat them on what really moviinn specialises in terms of once you're settled. We'll beat them on the touch with regards to how confident do you feel? How informed do you feel about markets? Can you ring me up at any time of the day and explain to me where my strategy is wrong and allow me to we'll talk through a strategy together and how to protect your money making this big move. So I may not quite have the slides that my colleague did there that were very good, but we do have over 2 decades of experience behind us in this realm. We're partnered with a great company in moviinn. And at this time, with so much going on in markets, with Trump announcing a 50% tariff on the European Union, those negotiations ongoing, would you really want to go it alone at this time? Or would you want some consultation with regards to what time do we jump? How do we protect our assets that we've worked years for in making this big move? And that's where Caxton and myself come into the equation, with just helping you make that foreign exchange decision, making sure that those dollars, whether they're Canadian dollars, whether they're Australian dollars, or indeed American dollars, or even New Zealand dollars, or those pounds, they all go to work for you to the maximum extent possible in Portugal. But without further ado, I believe there's a question and answer session. They're always my favorite aspect. I think that's where we can best display Caxton's full knowledge. So I'd be very happy to pass back.
Oh, great. Thanks, David. So just before we do go over to Q&A, a question here in terms of timeline. So how much time prior to moving forward with actually making the transfer would you suggest that clients sort of work this out? So get in touch with you and work it out.
Absolutely. Well, it's a great question. And what we always say at Caxton is, the longer you can keep us informed, the better we can do. Very simply, if you, James, had a transaction to do and you said, I want this by the end of the day, well, even if we got you the very best price, we'd only be getting you the best price on the day. So especially with something as big as a move to Portugal, and this is where I think both moviinn and Caxton can particularly offer value, is that this isn't a middle of the night decision. You don't suddenly bolt up in bed and go, we've got to go to Portugal. I want to sell a house by tomorrow evening. This is a long-term decision, and it requires prior thought and planning. So I would say that as long as a period is possible, look, whatever period you deal with, if you particularly have itchy feet and need to leave, we'll be there for you. But the longer period you have, within a couple of months, even with the dollar declining in value as much as it is, we'd have been able to get you, we have a great success rate of trading out clients, close to about the 95th percentile available for that month. So if you do give us the time, the longer the time you can give us, the better value we can get. Help us help you in a way. But just keep in touch with us. That's the power of Caxton over a number of competitors, whether they're Revolut or Monzo, whoever. You can ring us up at any hours, and we will have an advisor with you, just to not even to suggest, but just to go through your decision making, to make you aware and to make you more confident of what's going on in the market.
Okay, great. Yeah, I think preparing and planning for things like this is definitely something that goes a long way. So in terms of, I know we have seen, the first quarter, second quarter being somewhat turbulent geopolitically. Won't get into the politics on that. But how do you see, US, EU trade negotiations moving forward, and how does you see that influencing exchange rates and the implications for Golden Visa investors?
Absolutely. It's the $1 million question, really. It's what we would expect. Trump came out with a particular threat that there was going to be a 50% tariff on EU goods. Now, that was just that, a threat. He threatened 150% on China, and it came down to 30 in the end. Well, it must be said that the European Union is both a more important ally, firstly, an ally to begin with, and thirdly, really, it's a much more friendly economic partner. Even if the European Union does run a $200 billion surplus with the United States in terms of trade, it's still, the Americans would far prefer the Europeans on their team. They're far friendlier a power than the Chinese, let's say. Again, not getting into the politics as James so widely guided me, but nevertheless, we do expect a pretty favourable end to negotiations for the European Union, considering the 50% threat. China's at 30%. The EU is a far more important ally and friend for the United States. Our view at Caxton is somewhere between 20 and 25% of a tariff. that's excluding steel, which has went up to 50%, but that's unlikely to hurt the EU too much. We would expect overall then that we're going to see a continued weakening in the dollar against the euro, which for the short period makes this more expensive. But in the long term, when I said they're 10% up on the euro stocks this year, 15% up on the Lisbon Stock Exchange, money is pouring out of the United States and into Europe. And I guess the question you'd have to ask is, do you want to be at the start of this trend or at the very end of it? And I think we're at the start of that trend now.
Okay, cool. Yeah, let's be hopeful there, and I'm
always
sure
optimistic.
having a continuous conversation with you, I'm sure that will definitely help them navigate these more turbulent times. So we spoke a bit about the UK, Europe. We've spoken about the US. When we're looking at the performance of the Canadian dollar and how the current, we do have a number of Canadian applicants as well. So what can you tell us? What can you share with us in regards to the Canadian dollar and the current impact of today's tariffs?
Certainly, yeah.
Are they safe from this, or?
I don't think anyone's safe at the moment. I was sweating much more. I thought you were going to ask me about a question about the UK economy. I thought, well, there's all my optimism gone. But Canada, we do have some reasons to be optimistic. Of course, we had that election only last month with Mark Carney narrowly winning the Liberal Party of Canada, just about power, not quite the majority he desired. But more importantly, what we did have today was the Bank of Canada deciding to hold the Canadian interest rate steady instead of dropping rates as many expected. That's good short-term news for the Canadian dollar, and we have seen a bump in value of CAD. The issue with CAD, and an issue that any Canadians who are considering a move may want to consider deeper, is that whatever happens in America, in the United States, generally has a double effect on the Canadian dollar. What do I mean by that? Well, if the US economy weakens, regardless of how strong the Canadian economy is, it's anticipated because of so much trade, because of how interconnected the economies are, Canada will be dragged down with it. So if the US economy underperforms, the Canadian dollar underperforms as well. On top of that, if the Federal Reserve cuts interest rates, then it's assumed that the Bank of Canada is going to follow suit because of, again, how interconnected. Now, that's good news and bad news. The bad news is the US economy is softening. It is weakening. We have a non-farm payrolls figure. That's the jobs figure coming out only this Friday. A Caxton, our in-house view is that's going to be reasonably good, better than anyone expects for the US economy, and also as a knock on the Canadian economy. So I think that Trump is going to round on Canada eventually. He was put off this time, but you have to remember this is a somewhat wounded president searching for wins when he can get them. And I think that the Canadian dollar for the moment is valued pretty strong, even if it has softened against the euro naturally, but the euro is the best performing currency of the first quarter. With that said, I think that Canada eventually will begin to see this softening. I think it will bleed through eventually to the Canadian dollar, and we'll begin to see that serious weakening in value that we've seen in the United States dollar.
Okay. So I don't want to rub any salt in any wounds here, but going back to the UK now. So you did touch on with the ECB, so European Central Bank, looking at lowering rates, the effect between sort of the pound and the euro. How do you see that playing out? And are there any ways that people can mitigate any risk if that were to be the case?
Absolutely. Well, I knew that we'd get onto the United Kingdom eventually, so I'd braced myself for it. But the European Central Bank does look set to lower the interest rate by minus 0.25% tomorrow. But this is what you get with Caxton. That move is already expected, so we don't expect the euro to weaken. In fact, if you've been listening to Lagarde recently and various other speakers for the European Central Bank, they remain pretty optimistic. And this is what we believe at Caxton, that if we just look at the European side of the equation first, it's not going to damage the euro too dreadfully because there's so much optimism surrounding a leave of capital from the United States into Europe. That's why we're seeing the euro appreciate across the board, because cash that was generally seen as safe in the United States is suddenly being seen as no longer safe. They have that clause within Trump's, and I'm quoting here, I'm not paraphrasing, the big beautiful bill that is essentially taxing European individuals and European companies harder just because of certain AI tax rules within the European Union. All of this frightens capital away from the United States, and its destination at the moment is the Eurozone. That's why we're seeing, as I've said, the Portuguese stock market 15% up since the start of the year. If you want to be dramatic about figures, that's an 800% overperformance against the US stock market. So there you go wild. And the broader European stock market's up 10%. So for Europe, things are going very well at the moment. The euro's been helped, especially if you remember, we had that €500 billion German increase in defence spending. That's likely to be followed by countries like Portugal and Spain and France. All of that's helping the euro. On the British side of the equation, what we have in the UK is really somewhat a worst of both worlds. Whilst the European Union does have weak growth, just like the UK, there is more green shoots in that all that capital is coming. Investment increased 15% in the European Union in the first quarter of this year. It's a popular trade. In the UK, we're not quite seeing that increase. Instead, what we're seeing is higher inflation alongside low growth. Whilst the European Central Bank can cut the interest rate, the Bank of England isn't looking like it can cut interest rates again until at least the beginning of autumn. Sounds good for the pound, it isn't. Investors are beginning to worry about the pound and moving money across the channel. And overall, we've seen the pound weaken off against the euro since the start of the year. While sterling euro is a stable, the thing about sterling against euro is it is quite stable. It's not quite like euro dollar. It's much more a 2% movement's big in sterling euro. You would still anticipate a pretty strong euro, perhaps a euro that's just going to appreciate further against the pound as the year goes on.
Okay. Well, thanks for that, David. We'll bring Guilherme back in now. Guilherme, welcome back. And I just want to touch on some questions that we've had from the audience. That some people that have pre-sent questions in as well. Guilherme, going back to the funds, in terms of a strategy for those that are looking for a more, let's say, secure, a balance between secure investments and growth, what could you suggest when talking about funds? When talking about funds,
of course. So it's always depends a lot on the risk return profile of the investor, right? As you well mentioned. But what I would suggest would be usually the investors that are a bit more conservative and a more conservative approach prefer to invest in the public equity side, especially because in Portugal, the Portuguese stock market, so unfortunately it's not the most sexy stock market in the world, but
sexy. This year it's become a little bit sexy.
This year has become
it's gone well.
Exactly. This year so far has become quite interesting, but overall the Portuguese stock market, so you don't have a Google or an Apple on the Portuguese stock market. So usually the sectors that are on the Portuguese stock market are more, let's call it traditional sectors. So industrial, banking, traditional retail. So a bit more conservative in that sense. And at the same time, even on our 40% side, we invest in companies on the stock markets in Europe and Canada, and even there we are quite conservative, trying to have positions that we feel comfortable in, mainly because we know the business that we are investing in, and most of the times we speak with the management team, even though they are trading on the stock market, and we sometimes even be active on those investments. So usually an investor that is a bit more conservative tries to choose more the public equity side. An investor that at the same time, the Portugal liquid opportunities has these advantages that is diversified, so people can understand that they are diversified into other economies.
Okay. David, I had another question that had been sent out earlier as well in regards to, so we touched a lot on the US and Canada and Europe. Are there any other regions around the world that you feel are benefiting from the current turmoil in terms of?
It's a good question. In my opinion, I still believe that the Eurozone is benefiting particularly. I have to say, especially, a 15% return, I find that sexy. I'll tell you that. I'd say it is difficult to see much winners. The Eurozone is the only place that's seen as a large bloc that's stable, that has its own currency, and that is well managed. Now, you don't get, you lose the large bloc and you lose the well managed in the UK. So that's already Britain off the list. Australia and New Zealand, that whole sort of oceanic region, that's suffering because of aggressive tariffs on China. Well, 33% of both Australian and New Zealand exports are bound for China. So if China slows down, those suffer. And that's what we've seen in the currencies as well on our end of the spectrum. We've seen a weaker Australian dollar, a weaker New Zealand. So we may say the Swiss economy, the Swiss franc in times of turmoil, people retreat into that. The Japanese yen has performed relatively well so far this year. So other than Europe, which I do see as top dog at the moment, I think Europe has benefited the most. I know people may struggle to see it at home. How's Europe benefiting? It is, trust me, in terms of capital accumulation, capital attractiveness. I'd say perhaps Switzerland, which again is EU affiliated, so I'm not thinking too outside the box. I'd say Japan's doing reasonably well. It looks like they're going to be negotiating down their own tariffs, and as well, the Japanese economy continues to churn over. But otherwise, the Chinese are struggling under the weight of this. If the Chinese are having difficulties, the Australians and the New Zealanders are. South Africa's continuing to have difficulties with political instability, and the United States, Canada, Mexico, not much needs to be said. I hope it's also difficult to predict that you're better off somewhere safe like the Eurozone, where things may move slow in the Eurozone, but when that's not always a bad thing, is what we say.
Yeah, that's true. True. Okay, so I think we can close it on that positive note there for the Eurozone in general. Thank you so much, Guilherme, for joining us today and for providing the insights in regards to the Golden Visa funds. And David, thank you for the insights in terms of currency exchanges.
Thank you, James.
Thank you so much. And thank you to our audience. If anybody has any further questions, please feel free to either send us an email, or if you'd like to schedule a call with us, you can do that directly through our website, or also by sending an email, and we will set that up and go over any questions that you might have. Thank you so much. Have a great day and a great evening to those that are on a different time zone. Thank you.
Thank you very much. Thank you.
Thank you, everyone.
See you soon.